The right financial education, this crash would be the best thing that ever happened to you. But if you're thinking like my poor dad, PhD, poor, helpless, and desperate, you'll probably be just like him.
Yeah.
That's the problem, because you have Uber is a complete stock market scam. You have WeWork, you have Peloton. Those are all your generation stocks, and they're complete shams. But they make a lot of money right now. So the reason I'm saying this is your greatest asset is this, your brain. And that's why we created this board game here, Cash Flow. So if you take this game and you actually play it and study it with your friends and all that, you'll get smarter. So instead of getting crushed, you have a chance. And there's no guarantee of it, because if let's say there's 100 people watching today, 2 of you will do something. Okay, so going back again 25 years, 50 years now, when I graduated from school, when I was 25 years old, all of my friends wanted high-paying jobs. So I get out of the Marine Corps, and what many of my classmates did, they went to fly for United Airlines. So they made a lot of money. For them, it was a lot of money. It was about $400,000 a year. I didn't take that route. Instead, I went to work for Xerox to learn how to sell. Because if you're going to be an entrepreneur, you've got to sell. So when I say that to most people, they say, well, I don't want to sell. So you're not going to learn that way. Then I had to learn how to public speak. Then I learned to write books and all this. So I get richer and richer and richer as the economy goes down. So all of you listening right now, this is your greatest asset. So I created this board game here, and you have a chance. The world of money, there's 3 types of income. So this is financial education. So if I was teaching a bunch of, let's say, high school sophomores at 15, I said there's 3 kinds of income. It's a very important word. Okay. And number 1, it's called earned income. This is what happens when you go to school and you get a job and you work for money. Earned income is you working for money. It's the highest taxed income. That's why that advice, go to school, get a job, and work hard. You're working for
Outdated.
earned income. Yay, yay. You pay a lot of tax. The second type of income is portfolio income. I should get. Portfolio income is also called capital gains. That's when you buy low, sell high. So that's portfolio, and I don't know the tax rate, but years ago it was about 20%, I forget now. It's changed. So most people, when they go to school, they get a job, they work for earned income, and they invest for the long term in the stock market, they're investing for portfolio income. And the third type of income is the income that myself and Kim and Kenny and all my advisors invest on your parents.
Passive income.
It's called passive. And the reason passive income is good is because no tax. It's wonderful stuff. So those are the 3 types of incomes. So this was in the book Rich Dad, Poor Dad. You have income, expense, asset, liability. This is the difference. And a lot of people read Rich Dad, Poor Dad, but they didn't get the message. Rich Dad, Poor Dad, I said the rich don't work for money. Well, this is where most people are focusing on. This was Poor Dad. Most people watching right now want a paycheck. That was Poor Dad. They work for money. And then they try and reduce their expenses. That's poor people thinking. I'm going to work hard, I'm going to try and save a little money. That's ridiculous. That's why you're poor. Got to change that thought. And this here is Rich Dad. Rich Dad said the rich don't work for money. The rich work for assets, and assets are down here. So this is called a P&L, and this is called a balance sheet. Now, again, it's the words. And from the Bible, I'm not really religious, but the word becomes flesh. You've got to know this word here. When I talk to my friends, we're talking about balance sheets. How many assets do you have offset via liabilities? And the average person, like my poor dad, a PhD, most employees, they think here. They think P&L, profit and loss. And the rich think in balance sheets. And when I talk to the average person, they have no idea